Hello guys, welcome back to our YouTube channel. On this channel, I'll be reviewing pairs from gold and GBP pairs. So for this particular week's edition of this analysis, I'll be showing you analysis on gold, XAUUSD, gold. So first of all, I'll start from my weekly time frame. If you check your weekly time frame, you see that gold is maintaining a stronger supply zone and a weaker demand zone. If you watch well, you see that is what's happening in the market. Let me use my trend line to indicate so you have a clear understanding of what I mean. If you watch here, you see that gold at this point broke the previous resistance at this particular zone with this tray, a kind of an accumulator top at this particular zone. Then if you watch your levels closely, you see that from this particular point, gold was a kind of maintaining this particular level and not breaking this particular level in your weekly time frame. Then I'll prefer to use a 45 minutes time frame to do my week's analysis on gold and show you my possible bias on this particular pair, whether I'm going for a long or for a sell mainly in this particular pair. My first confidence says that in a weekly time frame, there is a much resistance at that particular zone, of which price has not yet mitigated any of those particular resistance to push up more higher. Okay, here on a 45 minutes time, I will first of all mark my levels, my supply zone level and my demand zone level. So if you watch these particular levels, you see this is more of like a swing from this particular place. Here is a swing. Let me lock it so that I won't adjust it. Here is a swing, the swing low, and here is the swing high. The swing high is around 198 something. Just here is my swing high. Let me also lock it. So I've made the mistake of deleting it. So here is my swing high. And my swing high, if you watch your swing high, you see that at that particular supply zone, that particular supply zone is serving as your strong or a stronger supply zone. And market has not mitigated any other block at that particular zone aside this previous one. And market has been maintaining a weaker supply zone. So market will be selling until market starts maintaining a stronger supply. Then we start having a weaker demand. Then at this particular place, you see that markets recently broke below this structure, and after breaking below the structure, market needed to test this particular other block at this high. This particular block where I use the dollar sign to indicate that this particular zone now, price need to move as high as this place before market can continue a downside selling options. But if you notice, market has been trading in an internal structure of this particular major swing. So watch your swing, you see that after this swing, markets broke this structure at this particular low and formed a newer demand zone, which is this place I wrote a protected demand zone. So that strong demand zone now, market has not yet mitigated it again to signify more selling opportunity, but market has been buying and buying, and then the target for the buyers now, the bull markets, their target is to push price to this particular top. Here is my arrow. They are looking towards pushing this market from this current price up to this place. That's the target of the demand now. They want to push price from this particular zone to this particular zone. So market has been trading in the internal structure. So from that internal structure, we have to identify our internal break of structures, like internal structure breaks and all that. We have to identify all those and then find our possible point of interest and any other block around that particular zone, so you can pick a buy or a sell. Okay, let me delete the arrow so it won't. So market is looking at pushing price up to that particular zone. So if you backtest, you see that this particular internal swing, markets also made it a protected supply zone, and market started selling again from this internal swing, from this internal structure, this particular zone. Market started selling again. So market needs to mitigate this particular zone for it to push more higher for more buys up to this zone. But if price fails to push more higher, then we should expect the market to come down to this particular zone now. Of which the market comes down to that particular zone, market will get more liquidity and more momentum to push price from that zone, this place. If market should drop up to this place 1910, then it means that there will be a good buying opportunity from that particular zone up to this particular zone. So for me to know how to do my day trading very well for the week, knowing when to buy and when to sell, I have to adjust my time frame to a 5 minutes time frame from my 45 minutes to see internally what is happening in that particular previous swing inside the major structure. Then, if you watch well, you see that market has been trading in this particular place. Here we have a minor change of character, moving market from a bearish to a bullish. And market has been making more moves to the upside, of which markets came to this particular zone and started doing a sideways trading. So that sideways trading now, if markets breaks below this particular sideways trading zone, if market should break below this place, I'll be expecting market to drop more. Why? If market should break above this place, I'll be expecting market to buy. So we looking out for either to buy or to sell, we have to give markets more opportunity to allow us confirm whether we are buying this week or we are selling this week. We need news. If there is any news about the market this week, you should be also expecting more buying or selling opportunity for the week, making this week look making this week either bearish or bullish this week. So for now, this first candle of the day, the first candle with the daily market open, we saw a strong bullish candlestick, of which we still need more confirmations to know where we are placing our trades. But for now, I think there might be more buy than sell this week. That's my bias for now. I think there should be more buy this week than sell, because what's happened at this particular place, markets use this particular area now as a strong support, of which this strong support zone now, we don't know exactly what the market is planning to achieve at this particular zone, this particular area now. Market is trying to push markets more up from this zone now. So let's just watch more. Let's watch out more and see what we can take this particular week. But I should be expecting more buys this week than a sell. I'm expecting, I'm more bullish this week than bearish. So for now, let's still watch out and see what we can do for the week. So one of my rules for this week is, number one, I'll try and stay in a trade for at least 24 hours or more. Just stay in a trade till a swing is completed. The market gets to a particular inducement level or liquidity level before I close any trade. I will try to stop closing intermediately, like closing in between those two levels. I'll try to hold my trade up to that level, and that will help me to stop over trading. Because sometimes in the lower time frame, you've seen a buying opportunity, why in a high time frame you should be a selling opportunity. So all those things constitute why we lose more in trading. So for this week, I'll try to take few trades and try to maintain quality trades only for the week. So I wish you guys good luck as we plan on our trades for the week, and I wish you guys a profitable week ahead. Stay tuned for our next upload, and I'll be linking our Telegram channel to this particular video. So in the video description box, you also see a link there. Click the link to join our Telegram channel, and don't forget to also follow us on Instagram. See you next week. Have a nice day.